You open your credit card bill, the balance is massive. But at the bottom, there's a tiny friendly number called minimum payment. It feels like a lifeline. Pause. It isn't. That number is a carefully engineered mathematical trap designed to keep you paying the bank for years, sometimes decades. Today, we're exposing the predatory math behind credit card debt, why your balance barely goes down, and the exact strategy you can use to break the cycle permanently. When you use a credit card, the bank is essentially giving you a loan, but not a friendly one, a very expensive one. And when the bill arrives, they don't demand the full balance. Instead, they highlight a much smaller number. They say, just pay $30 or $40 and we're good. Sounds helpful, but it's not a favor. It's a leash. Banks understand something very well. Humans are terrible at long-term math. If the monthly pain is small enough, people stop worrying about the real problem. Let's do the math. Imagine you owe $5,000 on a credit card charging 24% interest. Your minimum payment is $100. How long do you think it takes to pay that off? 5 years? No. Try 9 years. And during those 9 years, you will pay the bank $6,000 in interest. You literally bought the original items twice. Here's why that happens. Credit card interest grows every single day. So when you only pay the minimum, most of your payment goes toward covering the interest that built up over the past month. Very little actually reduces the original debt, which means your balance barely moves. Imagine trying to bail water out of a sinking boat using a thimble. You're working hard, but the water level isn't dropping. That's what minimum payments do. They make you feel like you're making progress, while the debt barely changes. And here's the most cynical part of the entire system. People who pay their balance in full every month are actually the worst customers for the credit card industry. Inside the industry, they even have a nickname for them. They call them deadbeats. Why? Because those customers never pay interest, which means the bank makes almost no money from them. The real profit comes from people stuck paying the minimum month after month. But the system only works if you play by its rules, and you don't have to. There's a strategy called the avalanche method, and it's one of the most effective ways to destroy high interest debt. First, list all of your debts. Then rank them from highest interest rate to lowest. Ignore the balances. Focus only on the interest rates. Pay the minimum on all your debts, but throw every extra dollar you can find at the debt with the highest interest rate. That's the one draining your money the fastest. Once that debt is gone, take the money you were paying on it and add it to the next highest interest debt, then the next, and the next. Your payments grow larger every month, like an avalanche, slowly at first, then faster and faster, until the entire debt pile collapses. And here's the final trick. Automation. Set up automatic payments so the money goes towards your debt the moment your paycheck arrives. No hesitation. No emotional decisions. Just math. The system may be rigged, but the math to beat it is completely free. Stop paying the minimum and start buying back your freedom.